Property investing has long been a trusted route to building wealth in the UK. It offers the potential for capital appreciation, consistent cash flow, and long-term financial growth. But with rising interest rates, many aspiring investors are asking whether property remains a viable investment. While the landscape has changed, property investing can still be highly profitable, provided you adjust your strategies to navigate these shifts effectively. By focusing on the right types of properties and using creative investment approaches, it's possible to mitigate the challenges of higher borrowing costs and still generate substantial returns. As interest rates increase, the most immediate impact on property investing is the rise in mortgage costs. With higher interest rates, monthly repayments become more expensive, and this can eat into your profits if you're relying on rental income to cover a mortgage. However, there are strategies that can help investors turn these challenges into opportunities. One of the most effective strategies is investing in multi-unit properties, such as houses in multiple occupation, HMOs, or apartment blocks. These types of properties provide a higher rental yield because you're renting out individual units to multiple tenants rather than relying on one single tenant. With multiple streams of rental income, you're able to offset the higher monthly mortgage payments more effectively. Even in a higher interest rate environment, this can still provide a consistent cash flow, which is crucial for any property investor. Plus, as demand for rental properties remains strong, particularly in cities and areas with good transport links or proximity to universities, HMOs can be particularly lucrative investment. In addition to multi-unit investments, another strategy gaining traction is short-term rentals, like those listed on Airbnb. In high-demand areas, short-term rentals can command significantly higher rental rates compared to traditional long-term leases. This can be especially profitable if you're investing in prime locations, such as city centres, popular tourist destinations, or business districts. While short-term rentals require more management and can be affected by seasonal fluctuations, they provide the potential for higher returns, which can help offset the burden of increased mortgage payments. With the right property in the right location, short-term lets can yield substantial profits. Flipping properties is another effective way to avoid the strain of high monthly interest payments, especially when interest rates are rising. By purchasing undervalued properties, renovating them, and selling them for a profit, you can generate quick cash without the burden of long-term mortgage commitments. This can be particularly advantageous in a high-interest environment as it allows you to avoid ongoing repayments. Additionally, flipping can create substantial cash reserves that can be reinvested into other opportunities, helping you grow your portfolio. For many investors, a balanced approach is ideal, flipping properties for immediate returns while holding onto others for rental income. This combination provides the flexibility to generate both short-term cash flow and long-term equity growth. As rents rise and mortgage payments remain fixed, if you're on a fixed rate deal, your returns can increase year after year, allowing you to build wealth steadily through compounding, making property investing a powerful tool for long-term financial growth. Of course, property investing is a long-term game. Despite the short-term challenges of higher interest rates, investing in property remains one of the most reliable ways to build wealth over time. One key advantage of property investment is the ability to fix your mortgage payments. If you lock in a fixed rate mortgage, your payments remain predictable, even as inflation and other costs rise. This means that over time, as rents increase in response to inflation, you can continue to grow your rental income while your mortgage payments stay the same. This is one of the key benefits of property investing. You're able to increase your returns while maintaining a stable and predictable cost base. In a high interest rate environment, there are a few key actions you can take to ensure your investments remain profitable. First, increasing your deposit can help reduce the overall mortgage loan, which will lower your monthly repayments and may help you secure better rates. The larger the deposit, the less you need to borrow, which means less impact from rising interest rates. Another option to consider is refinancing your existing mortgages. By locking in a fixed rate deal for your portfolio, you can shield yourself from further rate hikes, providing you with more financial stability and certainty. Additionally, it's essential to regularly review your property portfolio, monitor the performance of your properties, check if your rental income is covering your costs, and consider ways to increase rents where possible. Even small improvements in energy efficiency or property maintenance can lower costs and increase your returns. For properties that are underperforming, consider selling or reinvesting the proceeds into better performing assets. This ongoing analysis allows you to make informed decisions and adjust your strategy as necessary. Despite the challenges posed by higher interest rates, property investment is still one of the best ways to build wealth. By shifting your focus to multi-unit properties like HMOs, or exploring short-term lets, and combining strategies like flipping and renting, you can still achieve significant returns. Property offers the potential for both short-term gains and long-term wealth, especially when combined with the ability to adjust rents and benefit from increasing equity. With the right strategy and a patient long-term outlook, property investing remains a reliable and profitable choice, even in today's high interest rate environment. To succeed in property investing today, it's essential to be adaptable and strategic. Rising interest rates don't mean the end of profitability. They simply require you to adjust your approach. By staying informed, refining your strategy, and being open to creative solutions, you can continue to generate substantial wealth in the property market. Whether you're looking for capital appreciation, rental income, or a combination of both, property investment remains a powerful tool for building wealth over time. As always, thank you very much for watching. I appreciate you being a subscriber, and I'll see you again on the next one.